Welcome back, AI curious folk. It's Friday here at AI Ramblings, episode 67. I'm Michael Porrick, your human AI guide, and it's been quite the week. And I'd like to kind of run through my three key items I want to talk about and the broader theme. The broader theme is basically going through my case for the three of the best of the Mag 7s out there, in addition to Nvidia. But before we get there, I want to talk about the other Mag 5 that reported this week, which is Apple. They had a terrific second quarter. And there was also some news on the negative side for Apple as well, which I want to touch on. So that's item two. And the third thing I want to talk about are basically my two other picks. These are not stock recommendations, but my two other best positioned companies in terms of the Mag 7s beyond Nvidia and Apple. And I'll walk through all of this in a way, hopefully, that it all comes together for you in a differentiated way relative to all the stuff that we're experiencing in terms of the flood of the news. So let's start with the first thing. Apple, they were the fifth Mag 7 to report on Thursday. I have a detailed report on my Substack. The links will be in the show notes. For the other Mag 4s, Meta, Microsoft, Google, Amazon, all basically saying that they're going to be spending more on AI. We're north of $700 billion this year, probably close to $1 trillion next year. It's interesting, about 10%, maybe 15% of that is basically inflation on the technology side. The supply constraints around memory and chips. Microsoft said that they were seeing about 25 billion of the 190 billion that they're going to be spending this year, basically driven by costs for the components to build all these AI data centers. And we're seeing a little bit of that in the Apple report. So Apple at a high level, terrific quarter. iPhone demand was very strong across all their models, and especially geographically, including China. Their services business, which is the number 2 business for Apple after the iPhone, over $100 billion business. So it's a very important one. And that too, again, up and to the right, margins good, a lot of details that I've gone through in some of the show notes that you will have the links after the show. But I just wanted to touch on Apple being very well positioned as far as this quarter is concerned, and then all the software things that they're going to be announcing at the WWDC Developer Conference coming in June. Specifically, their big partnership with Google Gemini, with Siri, and a lot of things that they should be able to accelerate, especially under the new CEO who takes over in September from Tim Cook, who, along with his other major hardware partner at Apple, Johnny Srouji, who just got promoted to the head of all hardware from his earlier position as the head of all things Apple Silicon. Those two individuals, I think, are driving the key piece of why I continue to be very excited about Apple over the next 2 or 3 years in this next leg of the AI tech wave. So the quarter was good. The issues are high-class problems. They have way too much demand, and there are supply constraints, especially on the memory side, etc. Which brings us to the second item of what I wanted to discuss today, that even Apple is not immune from memory and chips constraints despite their scale. I had a couple of posts up a few weeks ago, which I'll mark in the show notes, where I talked about how Apple is relatively well positioned versus any other big tech company in terms of their ability to buy huge amounts of supply years in advance from companies like TSMC, from the memory companies, whether it's Samsung or SK Hynix or Micron, anywhere where they need all the core components. They tend to use their huge cash hoards over the years to basically invest aggressively and buy up a lot of that supply ahead of time. Even today, that remains a strong relative asset for Apple that is very unique relative to the other big tech companies. But even then, the current supply constraints and the demand picture that we're seeing on AI, especially driven by this transition from AI chatbots to AI agents, where you need a lot more compute both on the data centers and on local devices like your computers, your Mac minis, which is what I'm using right now, and your iPhones, etc. You need a lot more memory, a lot more GPUs, neural processors, a lot more CPUs eventually for the inference activity for tokens. And Apple, even though they're very well positioned, so best of times, it is also the worst of times, even for Apple. And the reason this is important in item two today is they announced at the end of the day today that they were raising their prices for some of their Mac Mini configurations. The Mac Mini has been their most value-oriented product at $600 at the lowest configuration, small device that basically allows most people to do almost everything they need on a computer, and it goes up in configurations through the Mac Mini and Mac Studio with all their latest M chips that allow people to run huge local models locally on their computers. And the highest configurations of this, the ones with 256 gigabytes of memory and 512 gigabytes, Apple has taken them off the Apple Store. So even they are feeling the constraints, and the pricing for the base model has gone up from $599 to $799. So that is hopefully a short-term constraint. It doesn't take away from Apple's ability to still be the value definer. I had a big post a few weeks ago talking a lot about their Apple Neo MacBook, which is this $500 device that literally uses an iPhone chip. This, I think, is going to, and John Turnus, the new CEO to be, presented this. This, I think, is on the vanguard of what I think is Apple's core opportunity over the next 2 or 3 years, despite all of these supply constraints and price increases that we're talking about. Apple, relative to the Windows world and relative to the Android world, which is Google driven on the software side. But in each case, there are dozens, if not hundreds of OEM manufacturers around the world that are all reeling from the price increases, where memory is going from 5-6% of bill of materials all the way to 30-40% of bill of materials. And Apple is not immune, but Apple is the least affected or best positioned, I should say, in this transition. So from a point of view of if you're a consumer, Apple still is the best value, even with the price increases. And from an investor, they're still best positioned. So I wanted to highlight in these 2 points that they have a very good positioning and focus, especially because of Tim Cook's extraordinary capability, and the machinery is built around the world on the supply side of the equation. And then I'm very eager about the 2 senior hardware-oriented folks that are taking over the leadership, because I think hardware control is going to be a key piece of where we're going. On the consumer side, it's Apple with all these devices, and you've got the 2 best people in the world, I think, who can work through the technical stack of this. And the only other company that is as good on the hardware and software sourcing and building the ecosystem and the supply chain dynamics directly with TSMC, the memory companies, is of course Nvidia. But Nvidia plays not on the consumer side directly, mostly, but they provide the chips for 60, 70, 80, 90%, depending on how you look and measure it, to most of the world's tech companies that are building anything to do with technology and especially AI. So think about Nvidia and Apple as the best positioned hardware and software configuring companies. And obviously there are lots of other hardware and software companies underneath and around them that we can talk about. Intel obviously has had a huge run on the CPU side. Those are separate. But if you're thinking about who are the best positioned at the highest level of these AI moves on the hardware and software side, it's Nvidia on the data center side, of course, and Apple, anything to do on the consumer side. So I just wanted to underline those 2 takes. And there'll be, again, a lot of details on both of this in the show notes. The third item I wanted to touch on, because now we can take a breath from the 5 companies out of the 7 that have reported of the Mag 7. So you've got Tesla up next in the next few days, and then Nvidia reporting on May 20th. So we'll come back to those later as they report. But in terms of, if I just look at the 4 beyond Apple that reported this week, only Google saw almost a 10% move up, so almost $300 billion in market cap. And that's because a lot of things are going right for Google. Google is very uniquely kind of the Goldilocks of the Mag 7s. If you look at Apple, as I talked about, they're really positioned very well on the global consumer mainstream user point of view. and then you've got Nvidia on the enterprise, and then I think Amazon still stands out relative to everybody else on the enterprise cloud in terms of being able to sell distribution to all the world's businesses, large, medium, small, that use all things technology and AI. Google is well positioned right next to Amazon. So those two have been the most underappreciated big tech stocks over the last 3 or 4 years as this AI boom had started going. And in the show notes, I'll put up the two write-ups I had in August of 2023, so 3 years ago, basically saying that Google and Amazon are the underdogs. They are the least appreciated. And so I highlighted them. And obviously, both companies are now, as of today, I still think Microsoft, Meta, Elon with Tesla, and what he's doing with SpaceX, they all have opportunities, but they are much further behind on a number of dimensions relative to these two companies that I mentioned, along with Apple and Nvidia. So I would just underline those two as both of them just hitting their AI stride. Apple right behind them with the current move on AI value hardware and software that is coming. So those three, I think, are the ones to kind of focus on. Next topic I wanted to touch on was the AI gadget section. And there was an interesting article in the journal basically giving an update on the state of robotaxis rolling out across the country. And obviously, Google's Waymo unit is up ahead. Tesla, of course, has their robotaxis, which they're rolling out in the onesies and twosies across the country. And then there are a number of smaller players. And I just wanted to highlight this area because there's a lot of investor enthusiasm on this sector. I think it's a little bit too early in general. My take is that there is a lot of opportunity here, but just like Uber took 10, 15 years to get to mainstream and the stock really starting to work for investors over time once it was out there, this too is a long burn opportunity in my mind. But at the same time, it is something that is a lot of focus by investors. So it's obviously important to think about and talk about and write about. I have a number of posts in this, which I will touch on. But my take here remains that Waymo is still the most impressive of the services. They still have a long way to go, pun intended. But the one I'm also intrigued by is Uber, because what people forget when they focus on these robotaxi things is they just focus on the car and how it drives and whether it has LiDAR and it has other sensors or camera. But what's more important is the whole ecosystem around robotaxis, because you need the demand funnels, which an Uber and a Lyft bring to the experience. Aggregating so that people can actually find the drivers or the cars that they want and make their choices. And then the other aspect to all of this is fleet maintenance, and that's also something that Uber has a lot of potential scale, which is underappreciated by a lot of people who are looking at this from an investment point of view, especially when they're looking at Tesla by itself relative to the others. So I just wanted to highlight this topic. I have a lot of detailed discussion on this in some of the write-ups, so please do take a look at that. I've tried the Waymo cars. I've tried some of the others that are out there at various trade shows, including the Uber ones. The Tesla ones. But in general, these things, as impressive they are, you still have uncertainties in terms of how you interact with a driverless vehicle in terms of specific edge cases that you may want to adjust, which you can do with a human driver, which is tough to do with a no driver car. Specifically telling the car, hey, pick me up on this corner at this side versus that side, or drop me off at the airport in front of gate number E and not B. It's easier to do that with a human. The other thing, about a third of the rides are to airports where there's luggage, etc., and it's always helpful to have a human be able to help you load and unload luggage. These are small, subtle things, but they're very, very important in the overall experience. And there are no easy answers to this yet. And it's not entirely clear that there's a pricing advantage for this less service that you would have as a consumer. So there are a lot of issues to be worked out. And so that's one of my major cons or negatives in terms of today's robotaxi experiences. They are not close to the first experiences I had with an Uber. I remember very vividly in Germany with Travis Kalanick, the founder of Uber, the first of the Uber cars that were being rolled out in Paris, of all places, in the 2007 timeframe. And those were magical moments. Almost everything went right, and we will get there with these robo taxis, but we're not quite there. The second question is, what is my magic moment that I'm looking for on this? Is exactly that Uber aha moment. I think we are not quite there. We are probably maybe a year, maybe a little bit earlier than that. It'll probably occur with a Waymo, maybe, but not necessarily with the others, but we'll see. I'm going to keep an open mind. It's a TBD, to be determined. So that basically addresses most of the things I wanted to talk about on today's call. I hope you've had a great week. There's a lot of stuff to attack next week. And so want to wish you a great weekend. We'll see you again for AI Ramblings Daily on Monday for episode 68, and also our Reset to Zero 1074. I'll just also flag our post 1073 today, where I talked about the always entertaining Elon OpenAI showcase trial that's underway. It just finished its first week. Elon finished testifying. There's a lot of fodder for the papers and eventual books and movies. Look that up if you'd like. It's in the show notes. And as usual, thank you for tuning in, AI curious folk, and stay tuned.